Hey everybody, Douglas Hart, Next Mortgage. I'm pretty sure everybody remembers the movie Beck. I don't even know when the movie came out, but it was regarding the 2008 mortgage meltdown crisis called The Big Short. Really, really well done movie, told a great story that needed to be told. Unfortunately, there weren't more convictions and, people didn't pay for the damage done, but because of the damage done, as we all know, there were lots of things put into play, litigation, governing bodies, this, that, and the other. Now, I don't really want to talk about The Big Short today. I want to talk about The Big Lie. Now, The Big Lie came shortly after The Big Short. And when I say that, I'm talking about, if you were to look at pre-2007, 2008, when you look at broker versus lender channel, retail lender versus broker, it was about 50-50, maybe broker 46%, something like that. But a vast majority of people were brokers. And that's when I had a lot of experience in brokers. And then, the mortgage meltdown started happening. I think everybody might recall the implodometer. You remember seeing banks that basically were going out of business every day, and you had to watch where you sent your loans because those loans might not close by the time those doors do. I had a couple of those loans that didn't close that I had to resubmit to a different lender and, put it through the same process again. But it was a very scary time for all. And the big lie was you are not safe at a broker. You need to go to a place that corrals your own underwriting, processing, docs, funding, so you know you're going to get paid on your deal, on your transaction. Now, truth be told, were there mortgage lenders going out of business right and left too? Absolutely there were. At the same amount, there were. It's not like there were more brokers than lenders going out. Brokers were just folding shop because they were ma and pa shops. 2 or 3 people that are deciding to get out of the business because it's not so fruitful anymore. But when you look at the percentage of everything, it was not very drastic regarding lenders being, like it is nowadays. Lenders are about 80% of the business right now. And it's because of the big lie. And what they did is they tricked us into thinking that we needed the security of that, when that security costs money. If you really think about if they were to offer you the actuality, which the actual offer was, hey, listen, to make your transaction safer, I would like you to come over here to my place and we'll close it all in-house and I'll charge an additional 250 to 300 basis points on your volume. I'm going to pay you less than you make now, and you're going to have less options and less opportunities to make money than you're going to make now. And you're going to be capped on commissions. And I'm going to pick your processor and a lot of the people that you work with. But that sounds pretty good, right? No, it doesn't sound good. Of course it doesn't sound good. Nobody would have taken that trade. That was the actual trade. That was the big lie is, oh, you need us. Well, if they need you, of course you're going to raise those margins, right? I mean, that's exactly what happened. So you went from a 275 margin charge to the consumer up to 500-600 basis points to get the false sense security. And look at it now. I mean, now there's no sense to being on the retail side. The retail side is dying. It's dying. You know why? Because you can't pay all those people and still substantiate a low enough cost per loan to be profitable unless you're in a really good market. That's why. It's because the cost per loan has become a lot higher. And if you look around at a lot of retail places, a lot of their focus is going into wholesale. Many of their focus is going into wholesale. And the reason why is because it's more profitable. Trust me when I tell you, lenders are not in this business to lose money. They're not going to continue to lose money. And on the wholesale side, they get money. It's a clean transaction and they don't pay for office space or underwriters or docs or funding or healthcare or this or that or the other to get those deals in the door. So their cost per loan goes down. It's super simple. when you really look at it in those terms. So don't believe the big lie. If you're with a retail lender now, you're about 4 or 5 years behind. Truth be told, brokers became a far better source about 5 years ago, or better. And I mean better source in the terms of technology, options, marketing assistance. I mean, multiple lenders, multiple options to loan to, better rates, better comp, better turn times. What are you waiting on?